What's up, everyone? It's Kadi with Money Investing. In this video, we are going to be talking about Amazon, ticker symbol AMZN. They are going to be reporting their numbers, their earnings for the first quarter fiscal year 2023 tomorrow after the markets close. Today, we've got Meta, and tomorrow, we've got Amazon. So I've already done videos on Microsoft, Google, Visa, Lockheed Martin, American Express, Meta. All these companies have already been covered on the channel and Phase even. So make sure that you do check out those videos if you haven't already. But today's focus is going to be on Amazon. So I'm going to prepare you guys and we're going to calculate some intrinsic value based on the forecasted growth for the company over the next 5 to 10 years. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below with that 16% annual discount that's available till the end of this month. And that'll give you access to all the buy and sell alerts, options alerts, trade ideas, everything included, as well as the private member videos and of course the private live streams as well, which we do 3 days a week. So this right here is going to be the entire chart for Amazon, of course, and it hasn't really done much in a pretty long time, right? So Amazon is at the same price it was back in April of 2020. So it's been about 3 years since Amazon has pretty much given us a whopping 0% return. In fact, it traded exactly to the same low as it was during the pandemic. So Amazon during the pandemic was as low as $81 on a split adjusted basis. And even as early as October, December, it was trading around those prices. And from those levels, it has pushed higher a little bit. So it's rallied over 28, 29%. Year to date, the stock's up over 20%. So it has performed really well, but it's still very much in the context of this overall downtrending channel, which we'll talk about later in the video. Now, before we jump into the actual intrinsic value, this right here is going to be the EPS estimate for tomorrow. So 4/27, so April 27 after the markets close, 22 cents per share is the EPS expectations with revenues of over $124 billion. It's one of the very few companies that actually does generate hundreds of billions of dollars per quarter, which most companies don't even generate in a year. So, and we've also seen 14 downward revisions for Amazon over the last 90 days. So it's not surprising considering how expectations have really hit rock bottom. So in terms of the actual key drivers, AWS, as we're already aware, Amazon Web Services is the main profit driver for the company. That's the one that's actually generating operating profitability. Even net profitability is coming from Amazon Web Services, a leader in cloud services next to Microsoft Azure and of course Google Cloud. And the growth is expected at 14% on a year-over-year basis in the first quarter, which is slowing down. No doubt, it is going to be a little bit more than half than the growth, from previous year. But again, it's the bright spot in Amazon. This is really where Amazon shines with its growth in a cloud business. The subscription business is also expected to grow, but remain steady at 10.9% growth on a year-over-year basis, indicating high-value customers place on its Prime service. They have been increasing the pricing on the Prime service as well. And advertising, one of the fastest growing segments, also expected to see a 15.8% revenue increase in the first quarter. One of my main reasons to be investing in Amazon in the first place was advertising. It was not so much as AWS or subscription, it was mostly advertising. And all three of these businesses put together are very, very strong for Amazon. Of course, e-commerce is already so saturated. Amazon's already the king and pretty dominant in e-commerce that the growth rate's definitely a lot slower, and the margins are obviously a lot lower. But advertising, subscription services, and not to mention the AWS, all margins are incredibly high for Amazon. That's why the growth rate is so darn high for Amazon over the next 5 to 10 years. So this right here is the revenue. Again, you can see from $74 billion in 2013 to over $500 billion in 2022. And it's expected that Amazon's going to achieve over $1 trillion in revenue within the next 5 years. And gross profits have also been growing almost to over $225 billion. That's, almost half of that is getting translated over to gross profit. Operating income did take a little bit of a hit last year, and as a result, Amazon has started laying people off substantially to kind of reduce some of the cost expenses and spending in those areas. And as a result, the profitability is expected to regain its footing in 2023. This right here is going to be the shares outstanding. Again, pretty stagnant at around 10 billion shares. They have gone up a little bit, but they are sitting at just over 10.1, 10.2 billion shares outstanding, with EBITDA also growing. It's been a little bit back and forth from 913 million to over 12.5, 12.8 billion dollars. Now, of course, Amazon also does have its ownership in Rivian, which has been incredibly volatile, obviously since it's gone public. So that's going to be unrealized losses or gains factored into Amazon's earnings, which again, we know that in the previous quarters, they have accounted for Rivian's gain on that stock as profit, and the earnings jumped. And then in previous quarters, we've also seen that hurting the stock because of the lower earnings. So 43% gross profit margins. Of course, net margins are definitely a lot lower because e-commerce is still the dominant piece within Amazon's puzzle. And as the business kind of starts to shift away from e-commerce, not so much as in like shift away, but as advertising, subscription, and AWS start to become a little bit more dominant segments within Amazon's revenue mix here, we could start to see margins expand. And that's really what the bet on Amazon is all about. It's really all about the stickiness of the subscription business, Amazon Web Services, and not to mention the advertising, which is now starting to really, kind of post similar numbers to YouTube, and not to mention even better numbers than some of the other social media applications out there, including Twitter, Snapchat, Pinterest, and likes. So free cash flow margin, pretty flat. Again, the company has a pretty expensive free cash flow spend here, cash burn rate, because of the consistent infrastructure spending and investments in other projects as well. But I think 2023 is going to be shaping up to be a very, very lean and efficient year for the company. And we're going to learn from Andy Jassy as to what they also are planning to do with the free cash flow and what those estimates are. But in terms of cash, they're sitting on about $69-70 billion worth of cash and marketable securities as of the last quarter in 2022, and long-term debt sitting at just a little bit over $73 billion. So their cash to debt is pretty much 1-to-1, slightly higher debt than cash on the balance sheet, which is not really a big issue for a company like Amazon. So this right here is going to be the forecast for EPS. 2023, they're expected to report $1.43, which is what I've priced in over here, $1.47 to be almost precise here, $1.47. And the expectations for growth for Amazon over the next 5 years is over 41%. Yes, you heard that right. This is 75% next year, 41% the year after, 37, 21, 35. So the growth rate on a compounded basis is expected to be 41% for Amazon's bottom line. And this is all going to be coming in from, advertising and subscription and AWS and artificial intelligence and electric vehicles, like all the businesses that they are going to be investing in and are growing within. And of course, over the next 9 years, the growth rate is over 28.5%. And Amazon is one of the very few companies that's been able to grow consistently double digits revenue and earnings over the last 15 years. And the forecast is that they're going to continue doing that over the next 5 to 10 years as well. So 28.5% over the next 9 years, pretty solid. So that's where the expectations are right now. This is the revenue expectations, and they are expected to reach over $1 trillion in revenue by December 2029 fiscal year. So in about next 6 years or so, they're going to eclipse over $1 trillion in revenue, according to analyst estimates. So if you price in, right? So if you go with, let's just say, not going with 41% or 40%, let's just say that they grow earnings by over 30%, right? 30% I think is a reasonable number considering all the growth levers that they can pull on, and especially when analysts are expecting 41%. So I'm going with somewhat of a conservative estimate of 30%. We're going to circle back to the P multiple. Discount rate is going to stay put at 12%, 10% margin of safety, and they've already authorized, and they're going to potentially even authorize a bigger share buyback plan. I'm going to go with negative 5.5%, so meaning 50 basis points every single year. They're buying back shares and getting that number back down under 10 billion by the year 2028. So this is going to be 2023. So when it comes to PE multiple, the valuation right now for Amazon definitely can seem a little bit on the high side because last year's earnings were obviously a lot lower because of the decline in operating income, decline in net income, Rivian losses, all that stuff. And for those reasons, Amazon's PE multiple or price to sales multiple may seem a little bit on the higher end, maybe not the price of sales, but price to earnings. So I'm not going to go with super high 40, 50, 60 times earnings, but to keep that PEG ratio intact at 1, I'm going to go with, let's say, 35 is just going to bring our PEG ratio close to 1.17, which, puts our fair value on Amazon at close to $100 per share. If I go with, let's say, 30 times P multiple, that's going to put our fair value at close to $85 per share, which was exactly where it was trading at back in December, right? It was around those $84, $85 levels. Since then, it's already moved up 28, 29%. So this right here is going to be that sensitivity grid, and you can see that for yourself, how the fair value changes based on different PE multiples and different growth rates for Amazon. I'm a little bit comfortable at $85, $86, but I'm also, flexible because I do think that Amazon has a lot of growth potential. I think maybe even more so than Microsoft or Apple. And again, $90 is going to be the higher end of that flexibility range with 81.58, and the lower end, right? So plus minus 5%. And the technicals are very simple to analyze. This is the lower highs and lower lows, a consistent downtrend for Amazon. And more recently, though, we've started to break outside of this consolidation pattern. So Amazon's obviously been trading inside this rectangle for the longest time. And we did get a little bit of a breakout, but didn't quite get that follow through. The last couple of days we've been selling off, and today we're obviously gapping higher on Microsoft's earnings. So support level is going to stay put at 104. So this right here is going to be that level to watch for Amazon, with a resistance and a target setting all the way up to 114 to 115. That's going to be the next resistance and target to watch for Amazon. And support level, like I said, is going to stay put at 104, 105. And I don't mind dollar cost averaging or buying more shares or even selling cash good puts closer to $90, $85, $90 per share for Amazon to buy more shares. So hope you guys enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below if you are buying, selling, holding Amazon, and what your thoughts are on the upcoming earnings tomorrow. And as always, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And as always, happy investing. I'll see you all in the next video.